Good afternoon. Welcome, everybody. Thank you for coming to our workshop webinar today. We're really excited to be with you today. My name is Jeremy Calcara. I'm the training specialist with NPERS. With me today is Mariam Sultani from our accounting department and Vanessa Holin, the manager of our internal auditing team. We also have a few other people on the line today to help us with questions. Cassie and Jane are here as well. So we're very excited that you've joined us today for this this newish format. This is only the second one of these we've done, but we hope you find them convenient, and we're glad that you've chosen to be here today. I do want to just get started off with a little bit of housekeeping here. First, you'll probably notice that your mics are muted and your cameras aren't on. That's the way we have these set up. The only people who will be talking or have their cameras on today will be people who are presenting, just because it does tend to webinar runs at the speed of the slowest person on the line, and so we don't want to bog it down with a bunch of cameras, a bunch of microphones. So we do have that. That's nothing wrong with your system. That's just the way we have it set up. Just for reference, our day today is going to look like this. I'm going to talk for a few minutes, and then I'm going to turn it over to Vanessa to talk about internal auditing for a little while. Then we will take a short break to go splash water on your face, or maybe go in the other room and do some burpees, whatever you got to do to stay awake for another hour. And then I'll talk a little bit longer and turn it over to Mariam to talk about the accounting role. And then I'll close this off here. So, and then the last hour we just have set aside for questions. So if you do have a question, we will get to those there in the third hour, but also just so you know, there will be, time to get up, take a little break, refill your water or coffee or whatnot about every hour or so. But like I said, we do want to just talk about Q&A time here for a minute. We do have that last hour set aside for question and answer time, but I do want to just set some expectations regarding that time. There are well over 100 people that are registered to be here today. So we anticipate getting a lot of questions in. So if you do have a question, I would suggest getting it in when you have the question and not waiting until that last hour. Like I mentioned, we do have Cassie and Jane. Cassie's on our internal audit team. Jane is from our accounting team that'll be listening, and we'll be monitoring the questions as we go along, as well as, the rest of us will be monitoring that Q&A panel as we go when it's not our turn to talk as well. So if you do have a question, I would invite you just to put it in right away. Don't wait. You don't need to wait till that last hour. We don't want you to forget about it. Go ahead and put it in there, and we will get to answering that. We might answer it in the Q&A panel. We might also answer it audibly a little bit later if we think it needs to be expounded upon or anything like that. So, and then also, like I did mention, there are well over 100 people who are supposed to be on the call today. So it is entirely possible that we will just run out of time and not have time to answer all the questions that we get. If that does happen, what we are going to do is we're going to make a document of all the questions that we didn't get to. And then after the event is over, we will go over we will go over as a team all those questions and answer them and send them out in a document to people who are on this call today. So again, you have that question, go ahead and get it in there as soon as you can, as soon as you know what it is, so we can get to answering that and get to working on that. But then last thing here, if you do have a question, what we would really ask that you would do is to put it in the Q&A panel and not the chat panel. There are two different panels there that you can actually enter enter questions into, just on the right hand side of our presentation there. One is a chat panel and one is a Q&A panel. If you would, we would ask that you would use that Q&A panel. We like to keep that chat panel clear for us to present links to materials and stuff that we might be talking about. And the Q&A panel allows us to be able to track which questions we've already answered. So if you could go ahead and use that panel, we would appreciate it. questions that are asked in that chat panel can tend to get lost among all the links we might be posting. So if you do have a question, please put it in that chat panel. And then the last thing here, I meant to say it first thing, but we do have materials available for you today. If you wanted to follow along with our presentation, they would have been in an email reminder that I sent you either Friday or Monday, depending on when you registered. And you should have also had the opportunity to open those documents today when you signed in. But if you did not, I have put a link to those materials at the top of that chat panel where you can find the materials that we're going to use for this presentation. You'll just find our PowerPoint presentation on there if you'd like to follow along. I also put links just to our website, which we'll mention a lot of times today, and to the employer reporting page of the website and the new employer reporting manual, which we'll talk about here a little bit later. Okay, so this is just a quick agenda of what we're going to cover today. I'm going to spend just a little bit of time here talking about the employer reporting role and some ways that recent legislation is going to be affecting that role. Vanessa will talk about what you can expect from an audit and go over some common mistakes that we're seeing. And then we've got some updates to our website and in our employer reporting manual that we'll discuss. And then we'll hear from Mariam about some of the trends and common mistakes that she's seeing on the accounting side before I wrap us out with just a quick chat about reemployment and a recap of our afternoon. But first, let's talk about employer reporting here in general, just for a minute. I want you to know that you all have an incredibly important job as an employer reporting agent. About 6 weeks ago, I finished up our spring seminar season where we held 18 in-person seminars and 14 webinars for school employees to educate members about their retirement plan. And something that we always kind of camp out on and come back to is talking about how great the school plan in the state of Nebraska is. These defined benefit plans where your account balance doesn't matter are going the way of the dodo. They're hard to find out there in the wild, but yet here in Nebraska, we have this great plan that's not only surviving, but it's thriving for our members. And we think that's amazing. But the thing about a defined benefit plan is, because that account balance doesn't matter, it can only thrive insofar as the information that we get from you is accurate. Those pieces that you keep track of are so huge in helping this plan continue to be successful with the service credit time and the salary and compensation information. So we understand that you have a big job. We understand that this is just a small piece of all the things that you're doing. So we want to tell you that we really appreciate it. We really appreciate accurate reporting. When we do have accuracy in the employer reporting process, it ensures those proper benefit calculations, it minimizes audit points, it decreases follow-up work, and it does prevent a delay for our members in benefit payments. At NPERS, we do rely on you for that correct information so that we can calculate those benefits uh, properly. And we know that that doesn't always come easy. We know that sometimes we might ask for information that you have to dig for. It could be a hassle. Maybe you're digging through records that predate your time as a reporting agent to even find the information we need. We want to let you know we don't ask for this information to be annoying. We don't sit up in our offices trying to figure out ways to make life harder for you all. But I told this story last year, and if you weren't here last year, if we're here last year, sorry, I'm going to tell it again. But before I worked for the state of Nebraska, I worked for an insurance company in underwriting for almost a decade. I won't mention which one. They are known to brag about being like a good neighbor. But I spent a good amount of my career processing applications for their summer toys, their travel trailers, their ATVs, golf carts, stuff like that, and also their snowmobiles, so their winter toys. And we have this application for a snowmobile that would ask for this particular thing. It would ask, does this snowmobile have auxiliary lighting, yes or no? And if you answered yes, your premium was one thing. But if you answered no, your premium was the exact same thing. It didn't matter. There was no discount for it. There was no extra charge. It really did not matter whatsoever. We did not need to know that information. But our process is that if we got an application in that didn't answer that question, we would have to sit on it until an agent got back to us with a correctly filled out application. It was like this passive aggressive way to get our agents to fill out applications the way that we want them to. And I want to tell you that I can guarantee you at NPERS that's not what we do. If we're asking you for something, it is something that we need, and because accuracy really, really matters. And half an hour of time here and there can change an employee's classification. It can be a difference between a full year of service credit or partial service credit. So when we do ask you for something, just know that we're not doing it to be annoying. It's information that we really do need to have. And I would say even kind of the opposite. As we move on to the legislative update here, not only do we not ask for stuff to just be asking for stuff. We actively work with the legislature to make sure that we're not asking for stuff that we don't need. And you can see that this year in the legislation that was passed that removed that requirement with LB 700 for members and employers to submit the early retirement inducement and termination certification form upon termination of employment. So that was a piece of paper, that was a form that we were getting. It was in statute that we had to have it, but we were able to work with the legislature to say, hey, we don't need this information. Can we remove that requirement? So that was one thing that happened this year as far as legislation goes and changing the plan. LB 700 also clarified eligibility for enrollment for state agency school plan employees. So there are certain state employees who are part of the school plan with for various reasons. It kind of clarified those. And then something that I was excited about as someone who travels around and does our seminars was that LB 700 removed the age requirements for attending pre-retirement seminars. Previously, the law is that once you turned 50 years old, you could attend up to 2 retirement seminars on your school's dime to learn about your retirement over your career from 50 until you retire. Not in the same calendar year, but you could attend up to 2 and be paid for that time off. Well, one thing that we would hear over and over again at these seminars was, not just once per seminar, but 3, 4, 5 times people coming up to me and saying, hey, this is great, but man, I wish I knew about this when I started, or I wish I knew about this when I was 30. Some of these things about the plan, some of these things about other avenues for saving for retirement. And so we really wanted to remove that age requirement so that people could come a little bit earlier, learn about their retirement. Maybe hopefully it can help us keep some people around knowing how great that plan is when they do retire. So that is now they remove those age requirements. You still can only attend 2 for that paid time off. I mean, you can attend however many you want to, but you only get paid time off for those 2 times, but you can do it anytime throughout your career if you're a vested member of the plan. So that was removed. So we are definitely hoping to see more younger people coming to learn about their retirement plan and maybe get a little bit of a head start that over what we were providing before. And then the other legislation that applies to retirement, but not necessarily to agents so much, is that LB 873 is going to phase out Nebraska's state income tax on Social Security by 2025. Nebraska is currently one of 13 states that taxes people's Social Security with taxes their income. Social Security income, excuse me. And last year they passed a bill that would phase that out by 2030. But this year they revisited that and passed a bill that's going to phase out that state income tax on Social Security by 2025. So that level went down 40% this year, and then it'll go down 20% per year until it's completely gone there in 2025. We were excited about that. We know we lose a lot of retirees around here, and a lot of it is because of the taxes. And so we like to keep those people in Nebraska, and hopefully that'll help us do so. All right, so with that, what we're going to do is I'm going to go ahead and move on to internal auditing. Last summer, we started bringing along internal auditing to our workshops and working together just to have a unified voice on both the front side of your dealings with NPERS as far as the accounting, and also the backside with your audits. And so I think it's been a really, really good thing that we've been able to do as we, just make sure that you're getting a consistent message from us. We know that there are a lot of questions that come up in these workshops that do need more, not just accounting to answer them. They do need the auditing piece. And so we're really excited to have Vanessa here today to talk to us about auditing. So I'm going to go ahead and mute myself and turn it over to her.
Thank you, Jeremy. Just a side note, really quick, I do have Cassie Snyder here, the other auditor that is going to be monitoring those questions and answers. So as Jeremy said, when you have a question that maybe is going to require a little bit more feedback and some questions that we're going to have on our side, she will save those for the end. But if you have a clarification question of something that I've said, feel free to pop those in there and she can interrupt me and let me know that maybe I need to clarify something, that there's a question currently that we can address. But I wanted to start off by thanking you for attending. The fact that you are here with us today when this workshop is not a requirement tells us that you are doing what you can do in order to comply with the laws governing the school's retirement plan. I can't tell you how much we really appreciate the time that you are putting into understanding the retirement plan, all of the statutes, and then navigating how your school does things and how that correlates with the statutes. You'll note our audit team currently consists of only 2 people. Just as you are all struggling to fill your positions, we are also seeing that across the board on our side. I point this out for 2 reasons. If you received a notification of an audit and did not hear back, know that unfortunately that does not mean your audit was complete without any follow-up. Rather, we just have not been able to get to it yet. So as soon as we review that initial information, we will reach back out to you with any additional follow-ups we may have. But the second, and more importantly, I bring this up is so that you can see that we understand. When you tell us that you have nobody to come in, that you need substitutes to fill these positions, that nobody wants to work, we understand. Our goal is to help you understand the rules so that you can successfully fill the positions you have while complying with the rules. The school plan is one of the best plans there is, but I would also bet that it is one of the most complicated. It took me 6 months to learn the school plan, and I had the ability to come to work 40 hours a week, learn the current laws, learn the old laws, have discussions about the new laws that are possibly coming up, and then I was able to look at each employer and how they applied the rules. I was able to look at very complicated situations, navigate the laws, policies, procedures, while having access to our legal counsel and all the other departments here at NPERS to get every perspective, both longtime employees and new employees with fresh eyes and all of those in between. Also, we know how retirement is just a small fraction of what you do. While your job consists of probably 2% related to retirement, the other 98% is complying with all the other laws that you have and all the other additional duties that you have. I think my biggest takeaway in learning the school plan is that we are speaking 2 different languages. For retirement, our terms are absolute as they are defined within statute. There's no wiggle room for what substitute means when you are talking about retirement. However, every school has their own definition for what substitute means. The fact that we have to reconcile these two languages only complicates things. I try to make sure that is the first thing we do, as we cannot go over the rules unless we are both on the same page. So, why do we audit? Let's go over the NPERS internal audit department. Why do we even have to audit employers? Well, because Nebraska revised state statutes requires that we do so. We have 266 school plan employers that our department is responsible for auditing, and we have to in turn report our findings to the Public Employees Retirement Board. Our audits then get reviewed by the APA, along with the APA auditing the school plan employers themselves. But our audit department is also required by statute to audit NPERS. We have to review the internal controls and procedures for our agency as well. I mention this here so that you can be aware that we are all on the same team. It is our job to ensure we are doing things correctly internally, providing the guidance and ensuring compliance on our end. The internal audit department is constantly creating new tools and guidance based on the feedback that we get from all of you. When things are brought to our attention, that need for further clarification, we ensure we work with the appropriate department and get the employers what they need. For example, when I first started, even I was confused on what threshold we use to determine if a regular employee becomes eligible based on working that average of 20 plus hours a week in any 3 calendar months of the fiscal year. We received a lot of feedback on the employer's confusion as well for this. So we created a calculator tool for the employers that can assist in compliance. The calculator has the formula we use already embedded in it. So the total number of hours worked in a calendar month divided by the number of actual days in the month multiplied by 7 days a week. And it already has the fiscal year that we have to use, July 1 through June 30th. So all you have to do is enter the total number of hours worked in the calendar month. This tool is great because it also auto-populates the average number of hours worked in a week and will have a big alert on there that notifies you if that employee meets eligibility. Jeremy will go over a lot of the other tools later, but know that these are all on our website. If you can, on your downtime, take some time, go through the things listed under the school employer reports section. I assure you that you will find videos, tools, and publications that will make all of this just a little bit easier. I know that people are not excited to hear that it is their time for an audit. There were probably several people that cringed just knowing an auditor will be speaking during the workshop today. I want you to try and look at this a little differently. When I started in January 2021, if you were one of my first audits, you probably received a few emails from me and then your audit letter with not much guidance. But currently, that audit process looks much different. NPERS auditors have become subject matter experts on the school plan. I think we are doing a disservice if we do not utilize all of our knowledge on the school plan and change the audit process to not only conduct the required audit and do our due diligence, but also to use it as a one-on-one personal education for the school plan. Within the audit, we will look at your school's processes and procedures and see how they apply to the laws. We will help you go through your situations and explain that what the law is to help you navigate the retirement plan and what is needed statutorily. What you can see on your screen are things that we are required to test. Of course, we have to do our due diligence and ensure compliance, but we are not looking for errors. Rather, we are helping you apply all the retirement rules to what your school is doing and help correct things, so that on a forward-going basis, you feel like you have a better understanding for what is needed from the school. The audit process has changed over the last year and a half as well. As soon as the slide changes, you will see the components of the audit. When you receive a notification of an initiation of an audit, you will also be scheduled an entrance interview with any reporting agent and then your superintendent. We have this entrance interview to go over some basic things we want you to know when filling out the information for the audit, to allow questions beforehand, but also so that you can have a face-to-face interaction with your auditor and be able to put a face to the name. You will receive a checklist that tells you all the source documentation you need to supply. Know ahead of time that it is a lot of documentation. You will also receive a questionnaire as well that helps us get a better understanding of how your school or ESU complies with the retirement plan laws. Your audit will always be over the fiscal or plan year from July 1 to June 30th. That year is defined in statute, so it will not matter what your school year is. All new members within that year will be tested. But then also within that year, we will also test the March payroll and pull a sample of contributing members from that payroll. Know that within the sample of contributing members, we will always test the superintendent and we will always test the reporting agent. From that March payroll, we will pull all the non-contributing employees and test the entire fiscal year for them. After a few follow-up exchanges, you will receive your final audit letter along with a scheduled exit interview. Again, we will require the reporting agent and the superintendent to be in attendance of this interview. This will provide an opportunity to go over the audit letter, any findings, and then how to proceed on a forward-going basis. Just a couple of quick tips for the audit. The more you can organize the documentation you send in, the better. Writing notes on them, providing explanations, making sure you provide each item on the checklist and then label it accordingly. This reduces the amount of back and forth follow-up we will have throughout the audit. We are doing all audits electronically now. So if you choose to send in your documentation via paper, we will upload it and continue the audit electronically. We will provide a link to a share file in which you can upload everything, but you can also request an encrypted email if necessary. And of course, if your school uses any type of secure software, feel free to provide us that information and we can utilize that as well. The other thing that I would suggest is to read the internal audit newsletter if you received an audit initiation. When we write these, we provide current information on issues we are currently seeing, and it can give you some great insight into what you might actually see on your audit. So the top audit issues for this past year, you can see the list on your screen. We always have consistent issues that come up every year, but the last 2 years have seen a significant spike in issues related specifically for that year. For the fiscal year ending 2020, we had to really look at how COVID affected retirement. You heard a lot last year about tracking hours, when hours are worked for everyone, including extra duty, because of the issues that came up. So for the fiscal year ending 21, we have LB 147. This has brought to light a very significant issue that we are seeing consistently throughout a lot of school plan employers. So if you attended Orrin and Mai's presentation at NASBO, or if you read the internal audit newsletter, what we are going to talk about today will not be news to you. But if you haven't received this information before, you might need to ask a few questions to process what we are about to go over. With that being said, like I acknowledged earlier, if you have clarification questions along the way, Cassie is ready to answer those online while I'm talking. If it's something that we should address verbally, she will let me know and I can answer it just during the presentation. But again, if it involves a very specific situation with your school that I'm going to need to ask a lot of questions about, save those for the end and possibly even let's talk about those outside of the workshop. So what is LB 147? It was a bill that was passed in 2021 that is now part of our Nebraska state statutes. It became effective May 27 and enforcement started June 1. Among other things, it sets a limit on the number of days of intermittent, unpaid voluntary and/or intermittent substitute service a school plan member may work during the 180 days following termination of employment. What I want you to notice here is that the wording on this is termination and not retirement. This is going to be one of the biggest messages I need you to take away from today. Why does this matter and why are we talking about it? Because what we are hearing from employers is that everyone is aware of members needing to have a bona fide termination if they are retiring. Employers are saying that when someone retires from their school or ESU, there is a limited amount of time they can substitute or volunteer during the next 180 days, and they cannot have a prearrangement to return to service. From what I hear, most people are completely on board with that. But what I need you to hear is that it is not just for retirements, but that it includes all terminations of regular employment. So, even if the member terminated their para position at 25 to become a substitute, this applies to them. Even if a 65-year-old member leaves their regular position to become a substitute and does not take a distribution from their account, this applies to them. We are talking about all terminations from regular employment. If the member terminates from their regular employment, we need to track their service, which can only be substitute or voluntary service, for the next 180 days after termination. Now, here is the other most important thing I need you to take away from today. Once in, always in stopped in 2013. Once in, always in applied to when a school plan member was contributing at one school, then they should be contributing at the other school plan employers. Again, that changed in 2013 because for the schools, it was really difficult for the employer to ascertain where and if the employee was already contributing in the school plan at another employer. LB 147 did not change that. LB 147 changed the number of days a terminated member can volunteer or substitute in a calendar month to 8 days instead of the general intermittent rule. It also defined the day of service to include any length of time within one calendar day. So what that means is that whether somebody works 5 minutes of substitute service or renders 6 hours of substitute service and 6 hours of volunteer service in one calendar day, both of those situations equal one calendar day. So to further understand this law, we need to understand the terms as they are defined in statute and whether or not those employees are eligible to contribute in the school retirement plan based on their job classification. These 4 job classifications that you see on your screen, regular, substitute, volunteer, and temporary, are what we need to look at in order to determine if they are eligible. So let's look at the actual statutory terms. This is pulled directly from statute. If a substitute employee fills in for a vacant position, they are not a substitute employee for retirement purposes. If an employee comes in to train somebody else, they are not a substitute for retirement purposes. Very narrowly defined. So when you hear me say the word substitute, I need you to know that it's a person hired by a public school as a temporary employee to assume the duties of a regular employees due to a temporary absence. Anything beyond that is not a substitute employee for retirement purposes. This is important for two reasons. Since we're talking about LB 147 and this bona fide termination protocol, your 180 days of separation, they can only volunteer or substitute for 8 days during that time, in a month, during that 180 days. So if you have somebody that's terminated their regular employment and they're coming in and filling in for a vacant position during the 180 days after termination, that is an immediate violation. If you have somebody that is coming in and being paid to train their replacement after their termination of their regular employment and during that 180 days, that is a violation of LB 147. They have not had a bona fide separation. We won't go over voluntary. That's pretty self-explanatory. I want you to look at the temporary employee. Know that both of these, regular and temporary employee, come from statute, but know that a temporary employee is very narrowly defined as well. It's a temporary employee hired for a period of time not to exceed 1 year to accomplish a specific task, and when that task is done, the employee terminates. So if you have an employee that you are hiring with the intention of coming in for 1 year or less, and when they're done, their service is over, that's temporary. If that employment goes any time beyond that 1 year, they are not a temporary employee. And again, this is important for two reasons. Because substitutes and temporary employees are not eligible to be in the school plan. If they are doing temporary service during the 180 day, that would be filling in for a vacant position. That's a violation. Your regular employee is going to be somebody that you hire for regular and ongoing duties. They are the only ones that are eligible to be in the plan. So upon hire, then you look at their hours. If they're going to work 20 plus hours, they're eligible and go in the plan. If the intention is to work less than 20 hours, then you have to use that calculator, use that formula, track their hours, and put them in upon eligibility. So let's look at the LB 147 rules. And pretty soon, you won't hear us say it as LB 147, right? Because that was a bill that was passed, it's now in statute. And so we will just talk about what statute says. But for now, until everybody hears this message and everybody knows what LB 147 is, that's how we're going to refer to it. So in LB 147, we first have to determine that a regular employee terminated all of their regular employment. So if you have a teacher that is also the volleyball coach and they terminate their teaching position and now they're going to substitute, but they're going to continue their volleyball coach assignment, they have not terminated all regular service. Any other classification that an employee has will trump your substitute. Meaning, if we're looking at that 180 days and you have somebody provide substitute service and then you have them fill in for a vacant position, which is not substitute service. That would now be temporary service. The temporary trumps the substitute. That's your violation. For the scenario that I just brought up, that you have regular service with a coaching assignment, they only terminate that teaching service, continue the regular coaching service, and become a substitute. They have not terminated all of their regular service. So this LB 147, this bona fide separation protocol, is not enacted. So let's sidetrack briefly to discuss the termination date and how we determine what it is. In most cases, it is the contract end date, which should align with the last day service was rendered. The exception on that is when you have a contracted member who terminates service prior to the end of the contract period, but receives compensation for a full contracted amount. The member will not be deemed to have terminated service until the end of the contract period. So if you have an hourly employee, that's going to make it really simple. That should be the last day they rendered service. For a contracted employee, it could get a little sticky. Also know that the contract dates should not be manipulated. NPERS will not accept an amended contract that is different from all your previous contracts for the sole purpose of obtaining an early retirement effective date. Even if the last contract during the retirement year was changed at the beginning of the contract, NPERS will not accept it if the only reason for the change was to obtain that early retirement effective date. Our benefits team will look at the history and past contracts to ensure compliance with this. I'd like to bring this up because this issue was brought to me, and it took me a minute to understand. If you have somebody that has worked 20 years, and the last year the school and the employee agree that they're either going to change it at the beginning of the year, they're going to amend it, or they're going to just stop working past a certain day, even if the contract end date is later, because they want to retire and they want to do other things. Why does it matter? Again, it's if the only reason for that change is to get an early retirement effective date, it will not be accepted. So what I have been telling people, because a lot of people have come to me and said, well, my contract is just 5 or 10 days into the next month, but we don't ever work during those days. Well, maybe that's something that you need to take back and look over and see if contracts for everybody across the board need to be changed, so that your employees come retirement don't have to wait until the next month for that effective retirement date. I bring this up only because in testing LB 147, the termination date has been touched several times, and that was a point that I thought was really important to get out there. But let's head back over to LB 147. So on top of not having a prearrangement to return to service, there cannot be more than 8 days of substitute and/or volunteer service at any school plan employer. This means that they cannot sub at your school 8 days and then another school for 8 days. That is a violation. So if a violation occurs, the member must incur a new 180-day separation period with another 180 days of tracking. We've already went over the 8 days of substitute volunteer service for the next slide and how it changed just those two things. So let's go on to why it matters. Here's why. On the next slide, you'll see the IRS private letter ruling states that in order to determine that somebody has terminated, Their level of performance would permanently have to decrease to no more than 20%. So if you have a 1.0 FTE, 8 days a month, pushing it, but it gets really sticky when we talk about a 0.5 FTE, 0.75 FTE. 8 days, is that more than the 20% that they would have worked? And I guess that depends on the number of hours worked per day. But this is why it's a big deal for us to track it. Because the question then becomes, for both the employer and for NPERS, is did they truly terminate employment? So did they go down in the service that they're rendering? And then are they eligible for the plan? So to look at that a little closer, you have somebody that's a regular employee that supposedly terminates their regular employment to become a substitute, but they render 13 days of substitute service. That is now way over the 20% threshold, but it's also over that 8 days. I don't need you to worry about the 20% right now because in statute now it says 8 days. That's what I need you to worry about. I bring up the 20% because that's why it matters. We have to answer, did they truly terminate? So now if you look at your school statutes, it's 8 days. If they worked 8 days or less during the 180 days in each calendar month, then they've terminated. But then that second prong is, are they eligible to be in the plan? Per statute, substitutes are not eligible to be in the plan. We cannot have substitutes in the plan. That's why this matters. So now let's look at what are your responsibilities as the employer. We've went over a lot of this, so some of this I can skim through. But you have to determine if the employee terminated all of their regular and ongoing service. I'll tell you what we've been hearing is that we have a lot of employers under the impression that it's once and always in. So you're a teacher, you're a member, you terminate your teaching position, you move to a substitute position, once in, always in, they leave them in. That is a big thing that we are seeing. So what I am telling everyone is to look at the intent of the termination because there is no wiggle room. And if substitutes are allowed to be in the plan, they are not. Per statute, they are ineligible. Temporary is ineligible. To be in the plan, you have to be a regular employee, rendering some type of regular and ongoing service. So this is new territory, new things that we're looking at. Some schools are needing to get creative. We understand, when I said at the beginning that we understand you need substitutes and you understand you need employees, this is why I said this. We are hearing a lot of people saying, well, we need people to be in here. We need them to work more than those 8 days. They want to work as much as they can and turn into a sub, change to a sub classification from a para because they're making more money. We're willing to leave them in the plan. You have to hear me that substitutes are not eligible to be in the plan. So maybe it's something that you need to look at as far as, is it just a change in job classification? Do you want to hire permanent substitutes? Someone that's going to come in every day, no matter what, fill in for a vacant position, substitute for somebody that is gone, or just help out where needed. They know that they are going to come and render service every day at your school during the week. That's a permanent sub. That is a regular employee. If you look back at the term of substitute service per statute on one of the first slides, that's that fifth prong. It clearly says in statute that that employee is not a substitute. So that employee, dependent upon your facts and circumstances, could be eligible. Or maybe schools want to have a different classification. That's advice I can't give. The only thing that I can do is tell you what the rules are and help you figure out how they apply to what you're doing. But if the member is terminating their permanent position, only return as a substitute or volunteer per retirement terms, then termination of employment must occur. You need to determine their termination date and you need to submit a non-con. What I would also say for employer responsibilities is that you should educate your employees. I always say I'm checking my box. The statute tells me what I need to do. So I'm coming to you and I am giving your information and I'm doing the audit and I'm checking my box. What I need from you is to check your box. For LB 147, confirm if the member will be employed at any other schools, whether in a regular ongoing status or just substitute service. Notify them of their responsibilities and that they should inform you if they render service anywhere else. Let them know that the onus is on them if they are rendering service elsewhere and that they need to track all the service that they render. The member must incur that 180 days, no wiggle room. So I need you to start tracking all of the service rendered by the employee at your school. That's what I need from you. And then on top of that, only allow substitute and or voluntary service during that 180 days with no more than 8 days. So if you have a software that lets these people fill in for vacant positions, remember that's a violation. We can't have that. You need to only allow them to do substitute or volunteer service. Some schools have said they're not going to allow any service after termination for 180 days. Know that that is fine. You can always do less. You just cannot do more. So if no violation occurs, then substitute service can be rendered without limit afterwards. But if a violation occurs and the employee provides more than 8 days or notifies you that at another school they did that, we have to start a new 180 days, and then those super fun adjustment forms need to be completed. Once you have a bona fide termination, then you would follow the steps outlined for reemployment in the school employer manual. We also have on our website a flow chart. Now, know that LB 147 has not been integrated into that yet. Know that we have heard a lot of feedback on LB 147 and how to make it easier for all of you. So we are working very hard in getting some type of documentation upon hire, some type of documentation upon termination that you can provide to your employees that will help you walk through the steps, help them walk through the steps on what their responsibilities are. Know that we have also created different documentation that we can send out upon request for what is your responsibility? What is the responsibility of the employee? But on a larger scale, and so it's going to take a little bit of time, is since the rules have changed, since that flow chart was made, that calculator that you can run through to determine if somebody is eligible upon hire or rehire, we are working on getting it a fillable PDF that you can either save as and put in their folder or print it off. And that will walk you through the steps on if you put them into the system or not. I'm not going to go for time. I'm not going to go through the examples that are on the next several slides. Know that these examples, if you take the time, will take you through what happens if. If the school does this, if the member does this, then what do we need to do and what are our next steps? For auditing of LB 147, we were given another auditor. Because of that 20%, the 8 days is really on that higher threshold. Depending upon what your FTE is, could be more. We have to test it. So currently, if you have an audit with us right now, Even if you had an audit from before that was still ongoing, we added this LB 147 testing because we have to. But know that we are going to start current testing. So for anybody that's requesting a distribution or refund a benefit, no matter at what age, across the board at all employers, we're going to start pulling those and auditing and doing a deeper dive. So there will be some of the responsibility that's going to fall on the employer and some responsibility that's going to fall on the employee. In auditing world, we always say the more documentation, the better. But know that we're going to have that current testing. And then if you have an audit, we have that across the board. The last thing I wanted to get to, I know everybody probably wants a break. Jeremy has a couple of things to say, and we'll let Madiam speak as well, is one of the things that has come about that I just wanted to briefly hit on is immigration eligibility, qualified alien status. What upon eligibility, upon hire, if you are not a US citizen or you're not a permanent resident, things got really confusing on what documentation is needed, who is allowed, who is eligible, who is not eligible. And know that we heard the feedback. We have asked for an opinion from the AG's office. We've been patiently waiting for that for over a year. And so that could be some of the reason that some of the questions weren't answered. But it's been long enough. We've changed the manual. If you go online on the manual currently, you will see very different and distinct guidelines on qualified alien and eligibility. What I want you to leave with today is that if they're not a permanent resident, if they're not a US citizen, let us know. Give us a call, call employer reporting. They'll walk you through what documentation we now have an internal process that they will walk through. They'll look at, they'll try to make a determination. They will forward all of them to our legal counsel. He will look at them and make the ultimate decision on are they eligible or are they not. So if there's any questions over that, save those for the end. I'm going to give it over to Jeremy.
Yeah, very good. It does look like there's several questions that are along the same lines. So we will compile those and try to answer them all there in the last hour. Again, if you have questions, continue to put them there into the Q&A, and we will get to the ones that we can answer on the screen. And then we will compile the ones that we need to answer verbally there. So again, we've gotten several so far. I appreciate y'all putting those in there. We'll get back here in 10 minutes and continue. Okay, welcome back, everybody. We are going to just real quick, we've had a lot of questions that kind of all center around something that's pretty similar, um, questions about long-term substitutes and stuff like that. So what we want to do now is I'm going to give Vanessa a few minutes here to answer these questions, maybe reiterate a couple of things that she mentioned, and that way I think we might be able to answer several questions all at one time, and then we will go ahead and move on to the accounting side. But again, we're getting a lot of really great questions, and we really do appreciate your questions. And there's like there's like 4 people in that room working like a madhouse, just trying to make sure that we answer all your questions correctly. So we love doing that and continue to get those in. But I'm going to go ahead and turn it over to Vanessa here.
Thank you, Jeremy. There is just one thing that I would like to go over and not specifically answer any of these questions yet. While Mariam is talking, I'll go through and I will try and do specific answers. And then at the end, if what I'm about to say doesn't answer it and we didn't get to it, then we can go through each one verbally one by one and answer those. But when we look at the school's retirement system, we need to base eligibility on those job classifications. So when I said that we speak 2 different languages, I mean retirement speaks one language and the school speaks one language. Each school, though, speaks a different language as well. What I mean by that is a lot of the questions say long-term sub. It's hard to answer that without knowing what you mean by long-term sub. So let's just go over the classifications for retirement purposes. You have the regular employee and the substitute and the temporary employee. You have your three classifications. If they are anything other than regular employee, they are not eligible to be in the plan. So if they are a substitute or if they are temporary, they are not eligible to be in the plan. So dependent upon what you mean when you say long-term sub, it could fall under the substitute category or it could fall under the temporary category. If it falls under the temporary category and it lasts longer than a year, you now are no longer temporary and you're regular. So what I want you to try and do is look at the regular term, the temporary term, and the substitute term. Look at how your school defines long-term sub or how your school classifies any job and see where it falls under. And then that will answer your question. If you have any other employment other than substitute, it trumps the substitute position. So if you have someone that is rendering regular service and they're rendering substitute service, if they're not already in the plan, you track them both together for eligibility purposes because they have that regular employment, so they could be eligible. If you have a regular employee that also substitutes and they are already a member, all of their substitute service gets reported as well. So look at your individual job description and see where it lands. And from there, you should be able to determine if they're eligible or not. Let me leave it at that, Jeremy. Let you talk and Mariam talk. I'll go back writing some answers and then we can attack the rest at the end.
All right, very good. Thank you, Vanessa. So now we're just going to quick go over a few changes, some updates to our website and employer reporting manual that I want to make you aware of. We have a few, we do really try to listen and pay attention to trends and stuff that we're seeing that people are having issues with, and then create tools or videos and that sort of thing to help alleviate those concerns. So if you looked on our website anytime recently, you might see a few things like that to help you with some things that can be a little bit tricky sometimes. One of those is military service and contributions and uh, all that sort of stuff that goes along with that. We understand that that can be confusing, so we have created a military service guidebook that you can now find on our site. Once I'm done talking here, I'll go ahead and throw that link up in the chat panel, but that will run you through scenarios and how you're supposed to handle that sort of situation. Another thing that we recently put on our website here in the last month or so is a video just called LB 147, What We've Learned and What You Need to Know. And what we did with this video is we took and had our deputy director Oren and Vanessa record their speech or talk that they gave at NASBO and put that behind the slides that they used, so that if you weren't able to attend NASBO, you could hear what it was that they were speaking about. Or if you were able to and you want to hear it again, I know I need to hear something, usually 3 or 4 times before I really understand it. And so that would be a great video for you. It's just a lot of what Vanessa talked about today, a lot of that information, but it's in a nice condensed video. It's only about 25 minutes long, just some topics of some things that we've learned through a year of LB 147. We have the June internal auditing newsletter that's up on our site that came out in June. If you haven't read that, I would highly encourage you to do so. because I wrote it, and it's always nice when people read stuff that you write. Um, if I wanted to write stuff and have it not be read, I'd have a diary. But we would appreciate it if you read that. Again, a lot of that's going to be Vanessa wrote a long article for that. That's going to be a lot of this information that we have here today that's written down so that you can go back to it again and again as needed. And then obviously, another thing we're going to talk about is our updated employer manual. It has been revised, and the new revised version is up on the website right now at npers.ne.gov. Click on the employer reports school link on the left-hand side there in the menu, and then the school manual for employer contacts. I'm sure most of you don't need that direction. I'm guessing most of you have this printed off and take it with you to the beach for beach reading and that sort of thing. But for those of you that don't, that is where you can find it. The updates that we made this year, the biggest one where we updated a lot of verbiage regarding LB 147. We added an entire new page of just LB 147 concerns. It's at the end of chapter 8 there. Talked a lot about how it's applying to all terminating employees, not just the retirees. We added that section on citizenship considerations and how that's changed. Those last two slides that Vanessa talked about there, we added all of that information on there. We removed references to and samples of inducement forms as per recent changes in legislation. We don't need those anymore, so we removed any instance where it asks for them. And we also added links to forms and tools, including that new military service guidebook. What we really want to do is, and what we've been working on even for a few years, even before I was here, is making that manual just a really good resource for you to find all of the resources. So what we try to do is if we talk about a tool that we've created, we go ahead and link to where you can click right there and go to that tool. If we talk about a different page in the manual on a certain page, we try to have that be a link there where you can go to that page and get that information just to make it self-referential so that it can be easy for you. So we continued working towards that as well. So that is the employer manual updates. Those are the changes that we made. And with that, I am going to go ahead and turn it over to Mariam to talk to us about accounting.
My name is Miriam, and I am one of the school contacts at NPERS, and I work together with Jan to manage the school plan. Our contact information is on top of the first slide, our phone numbers, as well as the email addresses. We too are supposed to be the first two main contacts for the school agents. So we expect all of you to run all your questions through myself or Jane first. And then if we were not able to answer those questions, we definitely take it to the audit or the legal counsel to get an advice from them. Whichever way of communication you prefer, either a phone call or an email address, we are okay with both of them. We have resources available that we can use to find answers to most of your questions. So that is why we encourage all of you to please contact myself or Jane first before reaching out to the auditor or the legal counsel directly. I am actually in the process of moving my office, so my phone number might or might not change because I'm not sure if the IT department would let me keep the phone number, but my email address is always going to be the same. So if you have any questions about your reports, members, anything like that, just feel free to email us or call Jane or email Jane, whichever you prefer. Moving on. We will talk briefly about the school employer manual. Both Jeremy and Vanessa talked about this too. I would briefly like to mention that it is a great resource. That's why we keep talking about it. It is available on our website, and Jeremy mentioned exactly where you can find it. Our website is npers.ne.gov. It is a great resource for all the school agents as well as our for myself as well. I have it downloaded on my desktop and I pretty much use it on a daily basis to find answers to most of the questions that I get from the agents on a daily basis. And then one more thing during this presentation, I will most likely be talking about some of the mistakes that we see on our end, as well as some of the questions that we get from the agents on a daily basis. But before that, there is one more thing that I would like to quickly mention is the importance of the new member information packet, which is the packet that a school agent is supposed to provide each and every new member that they add to the school plan. It includes of the handbook, a beneficiary form, and then an application for vesting credit. These two forms and the handbook, they have to be provided to each and every employee that you add to the plan. Your responsibility is only um, to provide it to the employees, and it is up to the employee to read the handbook to understand what plan they are in, all the ins and out of it, and then also complete the beneficiary form as well as the application for vesting credit, and either mail or drop it off in our office. Um, so that we can process them. There was quite a confusion about the third application that is mentioned on the screen. There were some questions brought up in the previous workshops where they asked us that if we get an employee who had worked in a school previously, do we still have to provide this application to them? And I would say yes. It is basically a safety net. For example, if you provide this application to them and the employee mentioned on the form that they worked, for example, at Millard Public School for 3 years. And the form comes to us and we review it, and then we see that in our system it looks like they only worked for the school for 1 year. So that would basically mean that the employee is missing 2 years of service credit. In that case, if the information does not match, we can reach out to the school and we can reach out to the employee to figure out what is going on. And then if there are any mistakes or anything that we are missing, we can get those fixed. These forms need to be turned into NPERS within 180 days of employment, which I believe is mentioned on the form as well. Alrighty, so moving on, we will talk about the employees that you can add to the school plan. The first thing that you have to check in your employees is their age. If you have employees who are 18 and older, only those employees can be added to the school plan. Any employees younger than that are not eligible to be added to the plan. Once you determine their age, you would move on to see what position they have with the school. If their position is a regular and ongoing position, and they are intended to work 20 or more hours per week, you would add them to the plan. If they are actually, yeah, moving on to the third category, which is the temporary employees. Temporary employees do not need to be added to the plan because their position is temporary, but we have seen temporary employees who have been in their position for more than a year, and there is this rule which is also mentioned in the manual that if a temporary employee is in the same position for more than 12 months, they are considered no longer a temporary employee. And what you would need to do is after they complete their 12 months, from the very first day on after the 12-month period, you would start tracking their hours. And as soon as they do an average of 20 or more hours per week from the next pay period on or from the next month, you would add those employees to the plan. The fourth category of employees that you would have to add to the school plan are basically your previous employees. So for example, I was your employee and in 2020, and then I quit, and then I come back and apply for a position at your school at 2022. If the previous position that I had with your school and I had established membership with your school, which basically means that in the first position that I was with the school, the position was regular and ongoing, and I was added to the plan. That would basically mean that established membership with your school. So if I go back to the school, regardless of the number of hours worked, the school would need to add me back to the plan as long as the position that I am going back to is considered regular and ongoing. But if I am coming back to your school as a substitute or as a temporary employee, then you would not need to add me to the plan. Moving on to the employees that do not need to be added to the plan. The first one obviously is anyone who is under the age of 18, regardless of their position with your school, you do not need to add them to the plan. But as soon as they turn 18, um, you would consider adding them to the plan. You would look at the position that they have with you and see if they would be eligible to be added to the plan. The other two category of employees that you would not add to the plan are temporary employees and true substitutes. But as I previously mentioned, temporary employees, if they are in the same position for 12 months and 1 day, they're not considered temporary employees anymore. So after they complete the 12 months and they are in the same position, at that point you would start tracking their hours and add them as soon as they become qualified. It's the same with substitutes also. They do not need to be added to the plan immediately, but it is always a good idea to track their hours. And as soon as they do the same thing, which is working an average of 20 or more hours per week, for 3 months or for 3 calendar months from the fourth month or from the fourth pay period, you would add them to the plan. The next category of employees are temporary residents of the United States who do not have a green card or a naturalized document. If they do have any of those two cards, the green card or the naturalized document, you would add them to the plan. But if they don't have these documents, you would not add them to the plan, but you definitely would have a conversation with them to try to find out what their immigration status is in the United States, because there are several other categories that they might fall under that might qualify them to be added to the plan. So if they don't have any of those two documents, you would ask them questions like, do you have any other documents provided to you by the USCIS office? Or would you be able to provide any documents that would tell us what your immigration status is in the US? And explain to them why you're asking these questions. Tell them that it's just basically to determine if they should be added to the plan and receive benefits at the end when they retire, basically. So any employee who works less than 20 hours a week, yes, you would not add them to the plan immediately, but you have to track their hours. And as soon as they do an average of 20 or more hours per week in any 3 calendar months between a plan year, which is July 1st through June 30th, from the next pay period on, you would add them to the plan. And please keep in mind that these 3 months do not need to be consecutive months. So the first qualifying month could be January, the second qualifying month could be March, the third could be June. So after those 3 months after the June, which is the third qualifying month, the very first pay period, you would add them to the plan. Moving on, we will talk about what counts as compensation for retirement purposes. The first and the most obvious is the gross wages. The gross wages, most of you probably know, it basically means the money or the compensation that they make before you take any deductions out. Pretty much everyone reports compensation as gross wages, but we recently found out that there were a couple schools where the software company that they were using, they were actually reporting the net wages for a couple employees instead of the gross wages, and it was actually caught by the school too, so we just had to basically do some adjustments to fix those wages. So just make sure that if you are doing it by yourself or if you're using a software company to prepare your payroll files for you, just make sure that they know that gross wages is what you report to NPERS, not net wages. The other thing that would count as compensation is if your employees do any overtime or extra duty. Um, any money that they make for doing those things would also count as compensation. So you would report that as well. The third category, which also counts as compensation, in the 6 months that I have been at NPERS, I believe I have seen only one such case, which was so there was this school where they terminated an employee, and it was basically taken to court, and I think the entire legal proceedings took more than a year or so, and eventually the court overturned the decision and they ordered the school to basically take the employee and also pay back all the wages that the employee lost during the 1 year that they were gone. So if you have an employee who you have to pay back their wages, because of any legal proceedings or a court order, that would be considered compensation. You would report it, and the contributions for both the employee part and the employer part both need to be reported as compensation to us. If you offer any other retirement plans to your members, any contributions that they would make to those plans also would consider compensation. So it comes back to gross wages. Basically, report the money that they make before you take any deductions out, before you take out the retirement, before you take out medical, dental, and all the benefits, the money that they make all together as gross wages, that is what you have to report. We will be moving on to talk about the things that would not count as compensation. They're all listed on the screen. Some of the common ones that I get questions about are paying off unused leave. If you have an employee who's either retiring or who is leaving for any other reason and the school is paying them their vacation time or sick time that they have earned, those would not be considered compensation and you would not report those when you're reporting the rest of the compensation to us, basically. The other one that I have gotten questions about are bonuses, cash awards, and stuff like that. If your school, for example, provides everyone $500 Christmas bonus, that is a bonus that no services were rendered basically. So that bonus that you provide to your employees is not considered compensation and you would not report it. If any employees let go and you offer them a severance package, that also is not considered compensation and you would not report that to us. Um, I had quite a few questions lately about workers' compensation. If your school is paying anyone workers' compensation, that is also does not count as compensation for retirement purposes. It basically comes up to any money that they make, they have to provide some kind of services. If they don't work for it, that money is not considered compensation, basically. There's one more here that I had one question about recently was jury duty. If your employee goes and perform jury duty and the court pays them money, which obviously they do. So if for example, I was your employee and I was making $2,000 a month at your school, and then in that month I would go and perform 1 day of jury duty, and the court pays me $35 a day, which I think is the per day rate. So you would still report my compensation as $2,000, not 2,000 plus $35. We will quickly talk about service credit, which basically means the hours that you report to us. There are state statutes in place that define what hours you can report for your employees to receive service credit. The first one obviously is the working days, the work that they do, and the hours that they spend per day to perform their work. The second is sick days and vacation days. Sick days that they get paid for, vacation as well. For example, if they have PTO and they take sick days and vacation days, those are the hours that you would report along with the compensation that you would pay them for those sick and vacation days. If there are any employees who are out of PTO, which means paid time off, and other employees donate paid time to them, and if they use it, that would basically mean like that they're using their own sick days. So that would also include the compensation, and you would also report the hours for those as well. And then any other leave days for employee gets paid the regular wages as part of the employee's agreement with the employer. All of those would be considered service credit, and all the hours spent need to be reported by the school. The only time when you will not report compensation or hours is when an employee is out of the office and they're not being compensated for that time while they're being gone. Some of the examples of these would be maternity leave or any other kind of FMLA, which I will talk about in the next slide. I believe the maximum that people can take for maternity leave is 3 months. If they have enough PTO, like sick and vacation, to use for the time that they are gone, you would report both compensation and hours. But if they don't have time and they're still out of the office, obviously, in that position, you would not report any compensation or wages. So it only comes to if they have PTO, report. If they don't have PTO to cover the time that they are away, do not report anything. If somebody decides to take 1 month instead of the all 3 months and they have enough PTO and vacation to use for that 1 month and they got paid the regular wages, then in that case you would report compensation as well as the hours. It all depends if they have PTO. There is an example in the next slide that might help you understand the situation better. So we have an employee named Kelly who goes on maternity leave from March 1st through April 30th, which is 2 months. Um, Assuming that the first month she had enough sick or vacation time to cover the time that she was gone and she got paid, and the hours and the compensation both were reported accordingly. But for March and April, she does not have any sick or vacation use to left to use, basically. So in this case, what we want you to do is reports that you submit to us should look like the bottom example on the screen. So if an employee is gone for March and April, if they don't have any PTO to use, we want you to take them off the report and submit a non-con with the reason that they're out of the office due to FMLA. So your report should look like 0 compensation and 0 hours for March, which would basically mean that you won't have them on the report, as well as April, 0 hours and 0 compensation because the employee is not in the office. And then when the employee comes back to the office in May, you would start reporting the regular wages and the hours that they work, which are 5,000 a month and 160 hours per month. Now, we have seen some schools where they dock future pay and pay their employees when they're out of the office, and then when the employee comes back, they start docking their future pay, which might look like the example that we have on the top. So this employee was out in March and April, and even though they get paid $5,000 a month, uh, what school looks like what they basically did that they took out $1,000 from May, June, July, and August and moved the $2,000 to March and April so that they can pay the employee when they were gone. And then when the employee came back in April, they docked $1,000 out from all those 4 months. Now, we have asked the school to, even if they pay their employees when they're out of the office or when they're gone, and even if you dock the future pay and pay them when they're gone, we want you to report the compensation and the wages like the bottom example. But some of them have told us that the software companies that they work with, it doesn't allow them to do that. When you pay an employee, they have to add it to the report. So if the report looks like the top example, what you would do to fix it, that at the end of the docking period, which would be August, you would contact us and we can do an adjustment form to move back the $2,000 from March and April to the months that they actually belong, basically, which, as I mentioned, is done through the adjustment form. Adjustment forms are not only used to move back around wages to different periods and stuff like that. If you made any mistakes in reporting hours for an employee or overcompensated or undercompensated compensation and stuff like that, these forms can also be used to fix those mistakes as well. The adjustment forms are also used, for example, you had an employee who was qualified to be added to the plan, but for some reason the agent did not add him to the plan and it was eventually caught due to the audit or some other reason. You could use this form to make up for all the missed contributions. And vice versa, we could also remove wages and hours. For example, you add an employee who was not qualified to be added to the plan, we would again need to complete the adjustment form to remove all the wages and contributions for an employee who was not supposed to contribute. The instructions on how to complete the form are in the school manual for employer contacts, as well as I mentioned that myself and Jane, we get quite a few questions regarding the adjustment forms as well, and we sometimes also walk them through step by step on what they can do to complete the adjustment forms. The next slide will show you an example of the actual adjustment form. This is how the adjustment form looks like. Yesterday, I received an email where they mentioned that there will be a couple agents in the webinar where they're quite brand new and they wanted me to go over the adjustment form in detail and mention what each box is for, basically. Let me see if I can zoom this a little bit. Yeah. So for those of you who already know how to complete the adjustment form, I would just ask you to bear with me while I try to quickly explain how an adjustment form can be completed. So at the very top, obviously you would mention the school name and then you would mention the org code. The place where it asks for the periods, you would put the beginning and the end date of the period. You could use one line to make adjustments to one pay period. So that would mean that you can use the form to make adjustments to several period. We have seen a couple that use an entire form for one period. You can do that as well, but I would just like to mention that you can add multiple periods to the same form as well. So you could use May for the first line, June for the second line, July for the third line, so on and so forth. After you have entered the periods basically that you are making the adjustments to, in the next one you would basically add the employee's name and the social. If you're emailing the form to us, I would suggest just putting the last four of the social. If you're faxing or emailing it to us, faxing or mailing it to us, then you could put the entire social, which is much safer. So column A and column B are when you have to make adjustments to an employee's hours. The first column, which is labeled as A, in that column, you would enter the data that you have reported to us previously. And then in column B, you would enter the correct amount of data. So what this basically means that if you have an employee for whom you reported 60 hours for the period of May, and then later you found out that it was actually 80 hours. So you would put 60 in column A, 80 in column B, and if you have downloaded this file as a PDF, column C would automatically calculate the difference between A and B, and whatever number you have in the column C, that is what you will enter when you're trying to make the adjustment in the system. Moving on, column D and column E, these are when you're making adjustments to somebody's compensation. This is pretty much the same thing as hours. D is for entering the data that you have reported to us previously. If you have not reported anything, just leave that blank. But if you have, that is what you have to enter there. So, for example, for the period of June, you entered for Jane Doe $2,000, but later on you found out that she actually made $5,000. So you would put $3,000 in column D, 5 in column E, and then column F would automatically calculate the difference, which would basically mean that that is the difference that we will have to enter in the system. Once the form is completed, at the bottom of the screen, the three lines that you can see, H, I, and J, those are the three lines that would tell you the total amount that NPERS would owe the agent if we are removing compensation, and if we are adding compensation, it would tell you the total amount that the school would owe NPERS basically. Still, if you have any questions, I know that this was a lot of information and it might confuse quite a few of you, especially those who are new. Just call myself or Jane when you're trying to complete the adjustment form and we can just walk you through it. All right, we would like to quickly talk about name changes. We had quite a few problems with names being changed for employees even before they changed it legally. So we were just wanting to mention this quickly that by statute that we have in place, we are supposed to ask the agents to report contributions always under the member's full legal name. For example, if their name is James, you cannot use Jim as a nickname for their name in your system. Always use what they have on the SSN card or the driver's license. Um, if somebody comes to you and tells you that they changed their name due to divorce or marriage, or they changed it legally, just make sure you ask them if they have updated it legally with the Social Security Administration, and if they have the new card. If they do, please make a copy of that card and put it on in their file before you change their name. So always make sure it is the legal name. Um, obtain as much documents as you can. Next, we will talk about wage and contribution report. Most of you probably know that it is due of each month. It is like due the following of each month, basically. So January would be due on Feb 10th, February would be due March 10th, and so on and so forth. Now there was a little bit confusion that some agents were thinking that as long as they added or upload the file by the 10th, it would be good, but we actually would like to clarify that and mention that the agents are expected to confirm it by the 10th as well, because until you confirm it, we are actually not able to do anything with it. So make sure after you add it and validate it, you confirm by the 10th as well. If it is not confirmed by the due date, there is a penalty that you might get charged, which is the $25 plus the interest that is mentioned on the screen. Um, the interest is basically based on the payment that you would owe us for that report. If you are a big school, the penalty could be in thousands of dollars. If you're a small school, it could be like 50, $60. Um, if there is a reason, if there are like technical problems, or if you're short-staffed or any other problem, just make sure you reach out to myself or Jane as soon as you can, and let us know why you won't be able to get the report in by the 10th, and we will definitely try to work with you and work on ways to get the fee waived as well as get the report in. We will recently talk about, not recently, we will quickly talk about the report flags. You have probably received an email or two from myself or Jane where we have asked for clarification on some of the entries that you have in your report. We would just like to quickly mention that after you upload the report, you actually have the option to go in and see if you have any flagged entries. So, how you can do this is after you upload it, you have to validate it, and before you confirm it, there is an example like at the very bottom. And all you would need to do is to basically click on edit, and it would take you to a new different screen where it would show you all the employees that have flagged entries under option 2, and then you would click on each one and see what the flag is, and there would also be a comment box underneath the entry for each employee where you could explain why they're having the flag or the error message basically. We will quickly talk about some of the flags that you might see if you decide to go through them before you confirm it. The first one and the common one is whenever you add a new member to the plan, they will most likely get flagged, and what the system and the flag that you would see is the very first one, first and last name match exists. What this basically mean that we have a person in our system with the same first and last name. For this flag, what you would basically do is review their first and last name as well as their social and everything. If everything looks good, you would just mention in the comment box that you have verified the name and the social and everything is good. Once we see the comment, we will remove that flag for you. The other flag that you will see would be for your employees who have a lot of hours, for example, any hours that are more than 300, they would get flagged. And if you see that flag, all you have to mention is an explanation for why they have so many hours in that month. Some of the common explanation that I have gotten from school agents are they tell me that they are a teacher as well as a coach, so that's why they have a lot of hours. So if you see a flag like this, and if you can just mention in the comment box that the hours are correct and they have this many hours because they did some extra duty um, or coaching hours and stuff like that. And the third one would be when you change somebody's last name or first name, you would see that the third flag, which basically says that the SSN exists, but the first and or last name is new. So for this one, when you change somebody's last name and you see this flag in the comment box, what all you can mention is that you changed it per employee's request due to their marriage, divorce, or they changed it legally and stuff like that. And once we see that comment, we would remove the flag. The bottom one is not that important, and we might not even contact you as long as you have a non-con for this employee. The fourth error would basically, it means that you are reporting compensation and hours for an employee who has a termination date. Most employees have at least one paycheck after they terminate employment. So when I see this flag, I would just basically go and pull up the employee's profile. And then if we have a non-con, we just enter a comment that we have a non-con, and based on the non-con, this would be their last paycheck, and I would remove the flag for you. And then if you don't have a non-con, but you have a termination date, we most likely will reach out to you through email to find out if you would be able to submit the non-con as soon as possible. If you do not have time and if you have like a lot of other things to do on your plate and you do not want to go through the flags, that is totally fine. Just validate and confirm it. And once it comes to us, myself or Jane, most likely Jane will review the flags and she might be reaching out to you if she needs any clarifications. There's one more flag that I should have mentioned here, but it slipped my mind, which is reporting 0 hours for employees. If you do not report any hours for employees, it would get flagged as well. And if you see a flag like this, I have seen these flags mostly during the months of May, June, and July, and the explanations that I have gotten from the agents have most likely been that they are a 12-month contracted employee. They work only 9 months, but they get paid over a 12-month period, and they're not in school during the summer. That's why they have 0 hours. So I would take that explanation. Just leave a note as to why you have 0 hours, and if we have more questions about that, we will definitely reach out to you. Otherwise, we will remove the flag and get the report posted for you. Moving on to the next slide, we will quickly talk about the termination dates. We do get questions about this a lot, so we were wanting to quickly verify the dates that you can provide for different categories of employees. If you have an hourly employee, the termination date for those employees would be the last day that they are at work. If you have a contracted employee, the termination date for the contracted employee, as long as they complete their contractual duties, would be the last date of their contract. Unless the contract is terminated or they resign, then that would be the day that they resign, basically. And any employees who terminate employment and were in the plan and are going to stop contributions, you would need to submit the non-contributing member form for them. And we would also like to mention that we no longer need the inducement forms, and we have been receiving quite a few of them. We tried to communicate to all the agents back in March that these are no longer required. So if you are one of the schools that provide us with these, you could stop. It's just one more thing off of your plate and just do the non-con form because that is the only form that we require for all terminating employees currently at this point. Non-con forms, as I talked about, this is required for all employees who were added to the plan, terminated, but they terminate employment and stop contributions. If they're stopping contributions, you have to submit non-con form. And we would like to mention that we no longer take the paper ones anymore. I think they stopped somewhere last year, and we only take them online now. Most schools they have at least one non-con agent on file. There are a couple that don't. So I would like to request all of you to check your data, and if you are one of the schools that do not have a non-con agent, please make sure you add one. There is a form that you have to complete in order for us to add a non-con agent to our system for you. The form is called the Employer Reporting Agent form, and it is on our website under forms. Once you complete this form, you can email it to myself or Jane, or you can even mail or fax it to us. And once we get this form, we will add the non-con agent in our system. And what it would basically do that it would make an online profile for them, and every time we need a non-con, they will be able to just log in on our website and submit that non-con form as. Also, any payroll agents that we have, they can be non-con agents as well. So they're not need to be two separate employees doing that. And with that, I am all done. Thank you for your time.
All right. Thank you very much, Mariam. I appreciate that. Just FYI, I did go ahead and put that form for signing up to be the non-con agent or that sort of thing in the chat there. If you are a school that needs to fill out one of those, you can find it there in the chat as well as on our website. But we're going to just end up here with a few reminders before we wrap up and go to just answering questions. The first thing we're going to talk about, we've talked about it a lot today, but I'm just going to reiterate a little bit, maybe from a little different angle, and that is reemployment after retirement. You know, we do get questions, from people wondering why they can't volunteer after they retire. So I want to just tell you a scenario here, right? So somebody retires, they quit on a Friday. They come in on a Monday and volunteer to do the same, and they do the same job, same office, same phone number for 6 months. And then in 6 months, that job is posted, and by some stroke of luck, they get that position along with a hiring bonus that looks like 6 months of pay. Obviously, that you hear that story, and that's obviously not acceptable, but it's not a made up story either. And so, I think there are just loopholes that when people find a loophole, there's just people that will exploit it. And so that's why volunteering is on there. We need to make sure we have that bona fide termination, whether it is volunteer or not. So just keep that in mind. Volunteering is a big deal as well as far as LB 147 goes. We do have the limits on there now. So and then also prearranged returns to service are something that we also need to be very careful about. One thing, what I think this kind of looks like for the most part is like, I'm going to retire this in May, but don't worry, I'll be back to coach track next spring. That sort of arrangement. That we need to avoid that. That's not bona fide termination if they're arranging to come back. Now, it's entirely possible that that individual might retire in May. They might go and fish or whatever they want to do for 6 months and realize that that's extremely boring. And then they might apply for your open track coach job, come back in the January or whatnot. If that happens, that's completely fine. They would be, if they took their benefit, they would be a new member. You would start taking out contributions for them. They would have, they would be in tier 4. That's completely fine. But what's not okay is to prearrange that return to service. When they do that, put the whole it puts the whole plan out of compliance, and we don't want to do that. So um, and these are things that when it's found out, they're found out in audits don't necessarily come quickly, right? So once it's found out that there was not a bona fide separation because of a prearranged service or whatever it might be, the member is then responsible to pay back all of the distributions, all of the payments they've received plus interest, and that's an IRS tax debt at that time. So you can't bankrupt your way out of it. And also because it does take a while to find them, these are not typically small amounts. Recent amounts from cases I've heard of, we're talking, 300, 400, $500,000 that are, immediately due as a tax debt. So that's the kind of thing that could really ruin somebody's retirement. So, there is a right way to do it. We just want to make sure we emphasize that we do that right way. And then just a few quick things here. Actual hours need to be worked hours, not estimated hours. LB 147 needs to be considered for both retiring members and terminating members. Regardless of category, all employees must have their hours tracked every time they render service at the time they render service to document eligibility and ensure they receive the correct retirement benefit. This here is our website. We've talked about it a lot today. If you haven't been there recently, I would invite you to go check it out. Like I say, we're always trying to put new tools on there to help alleviate issues that we're seeing and concerns and that sort of thing. So if you haven't been there recently, we do have a lot of new stuff on there. I would encourage you to go check it out. And again, one last time here is the contact information for your contacts here in accounting with Jane and Miriam. They should be your first line of contact if you do have any questions. And with that, that is the end of our presentation today. Again, we do want to thank you for coming. If you don't have any questions, you are free to go. We really appreciate you coming. Hope you found this time valuable. But if you do have questions, we are going to stick around and we're going to answer those questions as they come in. So I'm going to invite Vanessa and Miriam to go ahead and come on back online here and maybe address some of these questions that we've got. We've gotten a lot of good ones, I see.
There are quite
All
a
right.
few that have been answered here.
Yes, we do have quite a few that are answered. If you have more questions, again, we're going to stick around here for a while and answer questions. So if you do have more questions, go ahead and put those in the Q&A. But Vanessa, were there any trends or anything you saw, something you want to address based on the questions you were answering as we start to go? I'll start to look through these for ones that haven't been answered yet.
Okay, I think that I was trying to go through most of them and answer them. So if the answer that you were provided it doesn't answer everything, feel free to keep those questions coming. But I'm just at this point going to start from the bottom so that we make sure that we answer everything. The one question that I want to answer verbally, it says, should coaches and sponsored be paid over the school year or over activity season only? And the one thing that you heard last year that was really, really pushed because of COVID, and you're going to hear it over and over, is from us, we're just worried about when it's reported. So as far as compensation and contributions, it needs to be reported when it is earned. If your coaches and your sponsors provide that duty all 12 months out of the year, then you should be reporting wages all 12 months out of the year. We have a lot of people saying that they are watching videos or recruiting or editing music or looking at plays and they provide that service all year. That's when it should be reported. If it's only service rendered during the school year, then make sure it's reported during the school year. And likewise, if it's during the season, make sure it's reported during the season. So a new one just came in: when a teacher who also coaches retires, I don't think they can apply for a coaching position they previously held even after 180 days. Is that correct? So the coaching, as far as NPERS considers it, regular and ongoing service, unless you can show us that it was temporary for the one season. So most of the time, your coaching is going to be that regular and ongoing service. So they would be eligible if they met the hours. So if you have a teacher who coaches, and we're looking at this LB 147 and that 180-day protocol. The other thing that I mentioned a couple of times, but I didn't really hit on, I know Jeremy hits on it, is that they cannot have a pre-arrangement to return to service. So what that means is if they were the football coach, they retire or they terminate, you do your 180 days, and they come back and they work that football coach the next year, that's pre-arrangement to return to service. So even outside of this 180 days, you need to look at that as well. Another question is, if you have an employee who works less than 20 hours per week in their regular job and substitute teaches on occasion, do you use the substitute teaching hours to determine eligibility for the retirement program? So again, I just want to reiterate, for retirement purposes, change my screen here. For retirement purposes, we have the first thing that we need to look at after we establish they're the age and after we establish the eligibility based on permanent residence or U.S. citizenship or qualified alien, then we look at their job classification. If they are a regular employee and they are scheduled to work 20 plus hours, you put them in. If the intention at the time of hire is also what we're looking at, okay? So if the intention at the time of hire is for them to work 20 plus hours, they go in. If they're a regular employee and the intention at the time of hire is to work less than 20 hours, you track the hours. Any other service that they provide other than substitute trumps that substitute service. So if they are a regular employee and they also perform substitute service, they are not a substitute for the retirement plan. So I need you to look at the individual in totality and not each specific service that they provide. If they provide anything other than that substitute service, they are not a substitute, which means for a regular employee, all service that they render, you track all of their hours to include any temporary, to include any substitute, whatever they're doing, and use that for eligibility purposes. The same goes for if you have somebody that is already a member and they're in the system and they're working 20 hours and then they also perform substitute or they also provide temporary, they report on all of the service. Jeremy, I'm getting a little lost in the questions. If you just want to
Sure,
fling them at us.
I see a good one here that I've never heard you even talk about before. Some districts are paying student teachers as a substitute or a stipend. How do we report or treat student teachers with respect to retirement?
So again, I'm just going to go back exactly how I just answered it. If they meet the age and they meet the eligibility based on permanent resident, U.S. citizen, qualified alien, then we need to establish what job classification they fall into for retirement purposes. If they fall under substitute, then they're not eligible to be in the plan. When I hear the word stipend, I always come up with a lot of more questions because normally stipend goes in line with an extra duty assignment or something like that. So you need to look at how that position is set up. What's the intention? Is the intention to only have them there 1 year or less? If it is, and if it's once that service is rendered, it's done and they fall in line with the statutory term for temporary service, they're not eligible to be in the plan. If they fall in line with the substitute definition, they're not eligible to be in the plan. So look at what your school is doing, how your school defines that position, and figure out where they fall for retirement purposes. And then from there, we can establish eligibility.
All right, and then we have a question here. So when you say terminate as a teacher and start subbing, they still have to wait the 180-day termination period or only work the 8 sub days in the 180-day period, correct? If they stop teaching and go directly to subbing as much or as little as their heart desires, then we would continue with the retirement contributions, correct?
Okay, so this is that major thing I need you to take away from today. I may shorten how I say it, but this is what I need you to take away. If they terminate from their regular service, we are not saying if they terminate from the employer. We are saying if they terminate from their regular service. So if they are no longer providing regular duties and they don't fall under that classification, then that 180-day protocol is in effect, regardless. It's not an option to have somebody terminate as a teacher, to have somebody terminate as a para, and to become a sub, be in the plan as much, work as much as they want, and continue contributions, because substitutes are not eligible to be in the plan. So it's not an option to just have a teacher, or it's that para one that I hear a lot. We have a para who could make more money as a teacher, or as a substitute. So they terminate their para position, their regular position, and now they substitute. Substitutes cannot be in the plan. So you have to do the 180-day protocol, which means they cannot sub more than 8 days in a calendar month for the 180 days.
All right, I believe we have a new one on the student teacher questions. If we hire them as a regular teacher after we thought at first they were a temporary employee, would we have to go back and do an adjustment?
Okay, so eligibility is based on the intentions at the time they are hired. So the intention is, and we saw this a lot in COVID, the intention is that Sam is going to come in and work 20 hours a week. And so based on that, we are going to put Sam into the retirement plan. But because of COVID, Sam works 5 hours a week and sometimes not at all, and then maybe starts to pick up hours when things come about. The intention at the time of hire is what we need to look at. So can you repeat the question one more time on the student teacher?
Absolutely. If we hire them as a regular teacher, but at first they thought they were going to just be a temporary employee, should they go back and do an adjustment?
Yeah, perfect. So that goes with the hours. So it's the same with temporary. If you hire somebody with the intention of their being a temporary employee to work one job, and when that job is done and it's no longer than a year, they terminate, then you do not put them in the plan. If at any point in time their job classification changes and now you're classifying them as a regular teacher, then regular is eligible based on the hours they work. So then you would look at, are they coming in and working 20 hours a week, or are they coming in and working 10 hours a week? So it's at the time of their job classification change. For that temporary position, if you have somebody that comes in and say they're filling in for a vacant position, you can't find anybody else, they've retired, they're done, they don't want to be around, and they say, I will come and I will work, I will substitute, is what the school calls it, but it's not for retirement purposes because it's a vacant position. I'll do that for a year. When that year is done, I'm out. You do not add them to the plan because they are a temporary employee. Now, if something changes and they decide, hey, I really like this, or I'm going to do it that second year, When their job classification changes, when they no longer can fall under those narrow guidelines of a temporary employee, they are now a regular employee, and then we need to look at eligibility based on hours. I see, Jeremy, a clarifying question on the coaches. It says, so if your coaches work outside of the season, we can pay them and report during that time. I think I did answer that, but in case I wasn't clear, just know that we cannot tell you how to pay them. Obviously, if when you pay them is when it's reported, it's easier and you don't have to go back and do an adjustment. But if you can document, you can articulate that your coaches are working all year or during the school year, then that's when they should be reporting wages. And it would be reasonable that you take that full stipend and then you take that full stipend and you divide it within the months that they're working. It's not an hourly wage, it's just a stipend. So we're not concerned about if it's 2 hours in June, 7 hours in July, 8 hours in August. We're just concerned if in that month, did they render service for that extra duty?
Okay, here's a question we just got. We had an employee who recently got COVID. She had no sick time available. However, the school decided this year that they would not have to use sick time for COVID if they got tested for it. So I would not report those 30 hours that we paid her, but were not for sick hours.
Oh boy. Okay. This one is probably going to require a little further dive into it. So when we look at compensation, I know that Mariam went over that and it's for services rendered. And let me see if I can actually pull up the statute here. So it is for services rendered, overtime pay, retirement contributions. If you are paying them for leave that they are using, it is compensation. If you're paying them for leave that they're not using, it's not. So this gets a little tricky where we're going to need to look at what was the intention of the pay, what's the documentation that you have supporting it. So that I would request that you email me with any supporting documentation you have and a little further dive into what that looked like on your end.
Okay, someone says we pay our employees their daily wages or hourly wages for jury duty. If they receive pay for jury duty, do they have to pay that to give that amount to the school? So I believe with jury duty, you're allowed the thing that we want to get across is that if you do choose to pay them for the time they're doing their jury duty, you don't pay for the extra money that they make on top of that as far as from the court. That's not compensation they get for the courts from jury duty is not reportable, but compensation that you did pay them while they were gone on jury duty is reportable. Someone says, will there be a screenshot of all the questions and answers somewhere that can be seen later? No, there probably won't be any questions that we don't have to answer today. We'll go ahead and record and send out the answers to everybody who was on the call today. Otherwise, the Q&A time, will be on the video as well. If a teacher stopped being a teacher 2 years ago and is actively subbing, do we have to go back and change her enrollment in the plan, or does the person continue as established 2 years ago?
So what I think they're asking, and if you can pop on there and say if I'm incorrect, is what we have been seeing consistently across the board is that people are saying that once and always in, and if they terminate their regular position as a teacher and then they start subbing, that the schools have just continued them in the retirement plan and kept taking contributions out and have not tracked, because the what I am hearing, the thought process has been is that only if they are retiring, if they're at retirement age and taking a distribution, doesn't matter. So across the board, I think this is important for everybody to hear as well. We have to take this on a case by case basis. There are a lot of these. Every school does it differently. I hate not giving you a direct answer right here, but every school's documentation is different. Every school is different as far as did they get a bona fide termination, even if you weren't looking at it, and at what point in time are we looking at? So if we're looking before that May of 21, then it was a different law. It was just intermittent, which means it's less days that they would have been allowed to look at. And those situations we had to look at on a case by case basis anyways. So if you have situations like that, reach out to me, reach out to Cassie, and we can go over your school, how your school has done it, how to navigate what has happened, and then how to, on a forward going basis, how can we reconcile it? Every school is going to be different. Every situation is going to be different. So we will just need to look at that on a case by case basis. And it looks like I saw the response there that that's exactly what we were talking about, that now they're not eligible for retirement, but it was that once in, always in. So feel free to give me a call, send me an email with any of the information, and let's figure it out.
All right, here's another one. For service credit, these applies to certified and classified employees. The same for verification, sick days, etc.
Yes, service credit does not change. It is any time that the employee, the member renders service, then you report it. So, and remember, it is just for used vacation and sick days and not for unused vacation and sick days. But it does not matter if they are hourly, salary, certified, classified.
All right, so I think we will go ahead and call it then. Again, thank you so much for coming today. If you do have further questions, you do have the contact information there for Mariam and Jane, or if you have specific auditing questions, you have the contact information there for Vanessa as well. But again, if you want to show this to other people who work with NPERS or do reporting and that sort of thing in your school, this should be on the website sometime in very early August. So we appreciate your time. Have a good rest of your day. Stay cool, and we will talk to you next summer.